So we'll jump in and come to order. Welcome. We have a few things before us today, and I'll kind of lay out the roadmap that I have, colleagues, and where I'm thinking of going, and look forward to where we decide to go as we go through. If you look at your agenda, we have a few bills to work. The first one up would be 2380. That one dealt with the Healthcare Stabilization Fund. There is a sizable amendment on that, so we did send that out earlier for your reading pleasure. So if you had a chance to go through it, great. If not, do strap in for the reviser's overview of that. I think most of it makes sense, but that's probably where most of our work will be concerning 2380. A lot of folks worked on it to make sense, but we will do that one. Then we will move to Senate Bill 78. Those are a couple of bills that we sent over. Again, as I had mentioned, there is a fairly technical amendment on 78, and then if the committee agrees, it would be my preference to amend 28 into 78 and send those two bills over together in 78 and leave 28 here in the committee. We'll then move to our hearing on Senate Bill 37, which is the licensing bill that they sent over.
I think
that may be more interesting than anything I have to say. So anyway, but after that, and working through Senate Bill 37, we will have our hearing on House Bill 2111, and that will fill out our day. So with that, we'll jump into the agenda that we have, and I would start with the committee's wishes on 2380. And just to refresh our memories, I'd have the reviser give us an overview of 2380, and then we'll move into our discussion. And we are not hearing the reviser. I don't know if it would be David or Reviser Ma that would be going over this one. As we await there we go.
Sorry about that, Mr. Chair. Give me just one moment.
Okay. We'll give the reviser just a moment, and to go ahead and take the next step, we'll get into that. But wishes on the bill, committee, Mr. Vice Chair.
Thank you, Mr. Chair. I move the committee recommend House Bill 2380 favorably for passage.
Motion by Representative Croft, seconded by Representative Neighbor. We are to discussion on the bill. So with this, if reviser,
I'm sorry, I am back.
I will make a motion for an amendment. So if you wish to just go over the bill and the amendment as we proceed, that would be great.
I can do that. And I'm going to go ahead and share this on the screens. Can everybody see the balloon if you don't have it in front of you?
Yes, we can.
Okay, great. So this is the balloon to House Bill 2380. And Mr. Chair, as you said, this is a fairly lengthy amendment to the balloon or to the bill. Basically, what I'm going to do is kind of go through it just page by page. Here, what you see in the title, we are amending service of notice to the Board of Governors, and that is KSA 3414. And I'm sorry, that's 403409, and 403414 is qualification of healthcare systems and healthcare providers as self-insurers. The first amendment occurs here on page 12. And here we're adding language. I'm breaking sections into subsections and paragraphs. So in subsection L, we're adding a paragraph 1 because down here we're going to add paragraph 2, and we're redesignating sub-elements. But up here, we're stating that a medical care facility or a healthcare facility deemed qualified as a self-insurer under KSA 40-3414A may opt out of the requirements set forth in paragraph B, so long as the medical care facility or healthcare facility substantially meets the minimum coverage requirements of this section through coverage provided by the captive insurance company of such medical care facility or healthcare facility. And what we're referring to are the new options here of option 1, the fund shall not be liable to pay in excess of $500,000 pursuant to any one judgment or settlement for any party against such healthcare provider, subject to an aggregate limitation for all judgments or settlements arising from all claims in the fiscal year in an amount of $1.5 million for such healthcare provider. And option 2, the fund shall not be liable to pay in excess of $1.5 million pursuant to anyone's judgment or settlement for any party against any such healthcare provider, subject to an aggregate limitation for all judgments or settlements arising from all claims made in the fiscal year in an amount of $4.5 million for such healthcare providers. So again, if the medical care facility or healthcare facility is deemed qualified as a self-insurer through the captive insurance company coverage, then they can opt out of that coverage. The next amendment, as I said, you'll see the redesignation of sub-elements. That doesn't really affect the bill, it just affects the organization. But here we're adding a paragraph to say that the Board of Governors shall have the authority to adjust to the amounts provided in paragraphs 1B as the board deems necessary to effectuate the provisions of the Healthcare Provider Insurance Availability Act, provided that the minimum coverage for a healthcare provider shall not be less than $1 million per claim and $3 million in the aggregate. And again, that's going to be 1B up here. So option 1 and option 2. We're sliding down here. We're inserting where section 4 is in the bill. Prior to that, we're going to insert new section 4 and new section 5, and those are at the very back of the balloon. If you go back here, this is KSA 40-3409, and that's going to be your new section 4. This is the service of process statute. This is what actually we work with in our office, and what a bill draft will look like before it actually gets printed. So when you're looking at a bill draft, the red and the strike through means that we're losing that language, and blue and an underline is the new language that's being added. But to call your attention to what's changing here is that current law is a 10-day notice that to the Board of Governors for service of process. We're expanding that or extending that to 30 calendar days. And additionally, method of process can be certified mail, priority mail, commercial delivery service, or first-class mail, in addition to what was already there, and that's registered mail. Then new section 5 is 40-3414, and this is the captive, this states that any healthcare provider or healthcare system organized and existing under the law of the state that owns or operates more than one healthcare facility licensed by the state of Kansas, whose aggregate annual insurance premium is, and current law is $100,000 or basic coverage calculated in accordance with rating procedures approved by the commissioner may qualify as a self-insurer by obtaining a certificate of self-insurance from the Board of Governors. That aggregate and annual insurance premium is going to change from $100,000 to $150,000. And additionally, upon application, the Board of Governors is going to look at, they need to be satisfied that the applicant is there's a change here, possesses and will continue to possess the ability to pay any judgment for which liability exists equal to the amount of basic coverage required. And here are what the board will look at. We're just making a technical change here. It used to say any other relevant factors. Now it's going to say any other factors the board deems relevant. Additionally, we're adding language to say any applicant for self-insurance that owns and operates more than one medical care facility or more than one healthcare facility shall be deemed qualified by the Board of Governors if such applicant is insured by a captive insurance company as defined by KSA 40-4301 and amendments thereto, or under the laws of the state of domicile of any such captive insurance company. Now, if you remember that echoes back all the way up here to where we said if they're deemed qualified as a self-insurer, then they can opt out of those options of having to purchase the additional coverage. So back here then is the qualification that they have to meet. Now, so those are your sections 4 and 5 of the bill. So down here where it was old section 4, it's now going to be section 6. Things change pretty fast in a bill when you're adding sections. We are renumbering those sections. So this is section 6. This last sentence here, the aggregate fund liability for all judgments and settlements arising from all claims made in any fiscal year against a resident or non-resident inactive healthcare provider shall not exceed $3 million in any fiscal year. That sentence is actually being, as you see, it's a new strike of the language. It's being dropped right here into subsection B by itself. And it's just dropping down into a subsection and the language is unchanged. So it's going right in front of a sentence that says for all claims occurring on and after January 1, 2022, the aggregate fund liability for all judgments and settlements made in any fiscal year against a resident or non-resident inactive provider shall not exceed 3 times the coverage amount in subsection A. Then this would be subsection 7 and subsection 8. This is our repealer section. We're adding 40-3409 here and 40-3414 because we added those 2 sections, and the act would still become effective upon its publication in the statute book. And with that, Mr. Chair, I can stand for questions on the balloon.
Thank you, Madam Revisor, for going through all of that information. I might start with a quick question, and then we'll flash back to some other items. In the addended Section 4 and Section 5, the first page of Section 5, I might ask if we want to possess or be possessed, and which of those words we might strike. Just a little ways into Section 5, it looks like there's 2 places where those words could be redundant.
Yes, if you see where I have to strike healthcare and then underline health, I missed the strike and add in those sections. So the applicant possesses and will continue to possess. So that would all be stricken that I just highlighted. So the applicant possesses like that. and will continue to possess. It'll be correct in the bill. This is what I had to pull together for the balloon, but it would be correct in the bill. This is revisor technical ineptitude or balloon ineptitude.
So thank you for that clarification. I appreciate that. And then as we proceed, I want to say a thank you to you and all of the sets of eyes that have looked at this. There are many to go through and make sure that we had everything working with each other and all of the entities that needed concern and all of the ears that had patience for questions in working through that as well. I might spend just a moment, I think the committee is exactly familiar with what we're dealing with, but even at a higher level, those are the details in the amendment, but the real bottom line of 2380 deals with changing the medical coverage and those coverage limits between the private insurance and the healthcare stabilization fund, currently at 200,000 from the private insurance going to 500, and from the Healthcare Stabilization Fund, reducing to two options at $500,000 and $1.5 million of coverage. So for a variety of reasons that were there. So with that, Representative Riley.
Seems like you have a amendment on the floor. Do you need a second to that?
You need a second to that. You are correct. Would
second that motion.
Seconded by Representative Riley. I thank you for that. Further questions for the revisor? And thanks. Oh, Representative Neighbor.
Thank you, Mr. Chairman. And just for the revisor, there are a couple of places in here where there are just some technical changes. Is that correct?
When you're referring to just some technical changes, what are you referring to?
Like on page 1, it was marked NOR. We've got a lot of NORs that are marked out, and there are a couple of other pages where you just have of this section is marked out, who, subsequent,
Yes.
subsection. Those are also changes. Is that correct?
Yes, part of what we do in the office when we touch previously existing law, what we do is we go through the statute and bring it up to current drafting protocols, and we update language for readability. We also do what I call the witch hunt, and we look for that that usage, and we correct that as well. So you'll see the witch being struck out and that being inserted correctly, because somebody in the office way back when completely misused the grammatical usage of witch. And so we've been correcting that, at least I've been correcting that for about 6 years now, and the work continues. So yeah, there's a lot of different technical changes that have been made.
Thank you very much, and you must have had a fun Halloween on that. Your witch hunt.
Yeah, people don't understand when I put the billboard on that says witch, and they just don't get it.
Thank you. Thank you, Mr. Chair.
Other questions, committee? Representative Dodson.
I have a question on the bill, so is this an appropriate time to ask that question?
Certainly.
On page 14, about line 34, it says basic coverage in effect on the date of the incident giving rise to the claim, subject to an annual aggregate amount not less than 3 times the primary amount for all such claims. Does that mean something like treble damages, or is that something else?
So I might be able to explain that, but I might ask the revisor, or if we have someone from KMS that would like to address that question for us. It relates to the amount of damages that could be paid on related claims or a related instance. Revisor, would you like to take that on, or?
I can take a stab at it. Basically, this is a technical change, and it just states that the private insurer is only liable for the amount of basic coverage that's in effect on the date of the incident that's giving rise to the claim. And the annual maximum aggregate of all claims would be 3 times the basic annual amount 3 times the basic coverage amount. So if the person is carrying $500,000 per incident, the 3 times that amount would be $1.5 million. So that's the most the private insurer would be liable for in the year for all claims.
Yeah, I think I understand that. I have one more quick question on
Representative.
line 38 of the same page.
And Representative, if I may briefly, there may be one additional point. Reviser, do you remember if that particular section was also specifying the date of the incident to clarify if something happened prior to this being enacted and someone had only purchased, say, 500,000 of coverage, they were only liable for that amount and the triple amount, not the current amount? Was that part of what was going on here?
Right, that's the sentence that I just gave you, because the following sentence says for a claim of personal injury or death arising out of the rendering of or failure to render personal services by a healthcare provider, the insurer of a healthcare provider covered by the fund or self-insured shall be liable only for the amount of basic coverage in effect on the okay, I lost myself. Hold on. There's the section that says on and after January 1, 2022 that states that, and here we go. It's right here in subsection B. For incidents occurring on and after January 1, 2022, the aggregate fund liability for all judgments and settlements made in any fiscal year against a resident or non-resident. Is that what you're referring to, Mr. Chair? Shall not exceed 3 times the coverage amount in subsection A?
Thank you. Not necessarily. I was just wanting to see if that particular part that the representative was questioning also was relevant to the date, to specify that as well as the triple part that we had gone through. So I think that you covered that and then answered some additional questions I wasn't smart enough to ask.
Sorry.
So thank you. Sorry to interrupt, Representative Dodson.
Well, thanks, that clears it up. You know, when you look at option A and B, one is, if you just do the math, you get 3 times the kind of the base amount there too. So I just want to make sure I had the right context. And then I think on line 38, just to ask a question about, it says insurance in excess of such amounts is applicable to any claim or would be applicable in the absence of this act. Any payments from the fund shall be excess over such amounts paid. So where is the excess coming from?
So that actually is in the underlying language that exists. I might ask if someone from industry has an answer to that question, unless, Eileen, you want to weigh in.
I think that's a Clark Schultz question, personally, if he's there.
If Clark is around the corner, send him in. Otherwise, Ms. Colombo, if you'd get us started, that'd be great.
Thank you, Mr. Chair and members of the committee. Rochelle Colombo, Kansas Medical Society Executive Director. So that actually refers back to that language you already asked about. So I believe that that excess is referring to your aggregate annual claim, which can be 3 times that amount. And so the underlying bill stipulated that it would be 3 times what was already in place, and we're changing that based on the date of the incident that arises. But that excess funds and that aggregate annual amount, that still comes from the fund. I think that was your question, but it's capped at 3 times that amount. And so the question is relevant based on whatever that basic coverage is. And so that basic coverage, of course, is increasing, but it's going to be tied to the date in which the incident arises. So, but it comes from the fund and from those premiums that are paid in by the ratepayers. And I don't think that Clark is here, but that is underlying statute, so that's not changing.
Thank you. Are there further questions, committee? I don't I don't think I'm seeing any from here or there. So if there are no further questions, Representative Neighbor? Well, at the moment, I was going to close on the amendment and then vote on the amendment, and then we will be back on the bill. If there are other questions on the amendment, and the amendment's where a lot of the action is at here, so I don't want to rush it, but and then and I didn't rush it in the process. I just kept asking questions. So anyway, but thank you for your engagement on that. And again, thanks to everyone for their work on it. I think that this set of amendments does a lot for several of the stakeholders, and appreciate all of the work on that. And with that, I would close on my motion to amend. And on the motion to amend, those in favor signify by saying aye. Opposed, no. Ayes appear to have it. Ayes do have it. Thank you. The amendment passes, and we are back on the bill. Representative Croft?
Thank you, Mr. Chair. I move the committee recommend House Bill 2380 favorably for passage as amended.
Motion by Representative Croft, seconded by Representative Dodson. Discussion on the motion to pass favorably. Seeing none, Representative Croft, you may close.
I close.
Heard the motion by Representative Croft to pass House Bill 2380 favorably as amended. All those in favor signify by saying aye. Opposed, nay. Ayes appear to have it. Ayes do have it. Motion passes, and the bill will progress on. Thank you again to everyone for their work on that bill. Committee, that will take us to our next item of business, which would be Senate Bill 78. Again, just to give you the heads up of what I am thinking, is we would work 78, and any questions that are there, there is a technical amendment, and then I would ask for an amendment to amend the contents of 28 in. There is not a balloon for that. It would just be taking the entire contents and moving that in. So again, not the direction you have to go, the direction that I would recommend. But in that case, and just knowing where we're going, we would start with Senate Bill 78, and I'd start with the reviser if they'd just give us a quick overview of what's in 78.
Thank you, Mr. Chair. Let me get this up on the screen. Okie doke. And there's a technical amendment with the amendment, but I'm also going to request that the committee let me do an additional technical amendment right here in the title. As you recall, we struck the provision in the entire section 1 that gave the Commissioner of Insurance the ability to conduct investigations and subpoena witnesses and order depositions. We struck all that, but I failed to make the corresponding language in the title. I failed to strike that as well. So I would like to be able to request that I be allowed to strike that language in the title of the bill. In the balloon itself, as you recall, we struck the definition of auto club, and what my marching orders were to swap out the current language of automobile club and replace it with the House bill language for automobile service contract, and then add the missing word. So that's what I've done here. Service contract does not include an automobile service contract. As used in this paragraph, automobile club service contract means, and then here we go, a service contract. I believe the word contract was in and service was missing. That provides in consideration of dues, assessments, or periodic payments of money, promises to assist in matters relating to travel and the operation, use, and maintenance of an automobile in the supply of features or services or reimbursement thereof, which may include and paragraphs A, B, and C. So that is what was in House Bill 2136. That was, anyways, this is what the language was in the House bill, and we've gone ahead and inserted it in the Senate Bill 78. And as I said, it struck the existing language in there. And with that, I can stand for questions, Mr. Chair.
Thank you, Madam Reviser. So as you had said, it's basically House Bill 2136 with the updated word added to the Auto Service Club.
Yes.
Right. And then in your correction on the title, I was thinking of a couple other things. Were you striking the granting the commissioner the power to subpoena witnesses in the title?
Yes. This
So
pink
that,
highlight that I've got right here.
great. So that would just take that out, which is the one thing that is not in there.
Correct.
And everything else remains the same. So that will read a lot better as folks know what's in the bill. So that makes a lot of sense. In addition, and thinking back to the bill that we did just pass, I know that there is some license for changing like the possessed, possesses language or some of those things that is authorized. Is that something that is standard or anything that we need to mention specifically in a motion?
Well, the possesses that happened in the other bill, that actually is already correct in the bill draft. When I pulled it in as a Word document, what happens from the bill drafting software into Word is it loses all that nice formatting that is set up for printing a bill. It's not really set up for Microsoft Word. So when I do that, I have to go in and manually do all those changes. And like I said, it was my lack of attention to detail when I was working on that one part of the document that I missed the possesses. I don't know what possessed me, but I did miss all those.
No worry. I was just wanting to make sure not to drum on one, but as an example of other things, if we
But
needed
yes,
express authority.
Ordinarily, depending on the chair, I have, for instance, in my Senate committee, I have license to fix punctuation and things like that as a matter of course. It's up to you if you trust me enough to be able to have that ability or if you want to make that part of the motion. But for items like this, when I'm changing titles, that's something that I feel much more comfortable requesting the motion be included.
Great, thank you. Committee, any questions for the reviser on the bill? And we will come back to the amendment as well. Seeing none at the moment, Representative Croft.
Thank you, Mr. Chair. I move the committee recommend Senate Bill 78 favorably for passage.
Motion by Representative Croft, seconded by Representative Neighbor. Discussion on the bill. Representative Croft.
Thank you, Mr. Chair. I have an amendment. It's an amendment using the House language plus one word change. As already been mentioned, additional technical changes in the title section has already been, as has everything already been briefed by the reviser.
Great. Thank you. A motion to amend by Representative Croft, seconded by Representative Neighbor. Discussion on the amendment. All of that makes sense that we just went through on the amendment for this one. Representative Bishop.
Okay, I admit it. You lost me. What was the last amendment?
So, Representative Croft.
Thank you, Mr. Chair. It was the amendment as was briefed by the reviser. She just went through the whole changes, and I was just making the motion to move for that amendment to be implemented.
Okay, and as I understand it, the section, the bit that says granting the commissioner the power to subpoena witnesses, is that whole part is going away? That's what I thought. Thank you. I may have to stop you again.
No problem. Thank you.
Thanks a lot.
Appreciate the questions that folks have. So, other questions, committee? If there are no other questions, Representative Croft, you may close on the amendment.
I close.
Heard the motion by Representative Croft to amend Senate Bill 78, again by striking the granting the commissioner line and line 3, or much of line 3 in the title, and then updating the Auto Service Club language from the House bill and the language of the missed word. All of those in favor signify by saying aye.
Aye.
Opposed, nay. Ayes appear to have it. Ayes do have it, and the amendment passes. We are back on the bill. Representative Neighbor.
Thank you, Mr. Chairman. As per earlier discussion, I would also like to make an amendment that we take Senate Bill 28 and put it in Senate Bill 78. They cover within the same realm of topics, which is a rule for combining. And so I think these two would match up well. So I would move that we put Senate Bill 28 into Senate Bill 78.
Thank you, Representative. Is there a second? Seconded by Representative Dodson. Discussion on the amendment. Representative Riley.
Just would like to put on the record that I'm not in favor of moving bills from one place to the other. That's all, with respect.
So thank you, Representative. Appreciate you sharing position. So, and I know it can make it more confusing as pieces start moving to be able to follow and be clear about what has happened. Other questions or discussion on the amendment? Seeing none, Representative, you may close.
I will make a brief comment, Representative Riley. I don't like doing that a lot either, but these both have the same subject matter, and so I think it gives us another avenue if we have something that comes along as an emergency. That's the reason for doing this. So with that, Mr. Chairman, I move my amendment.
Thank you, Representative. You've heard the motion by Representative Neighbor to amend. All those in favor signify by saying aye.
Aye.
Opposed, nay. Ayes appear to have it. Ayes do have it, and the amendment passes. We are back on the bill. Further discussion?
Mr. Chair,
Yes.
a point of clarification, if I may. Senate Bill 28, as we amended it in the committee here, we changed the bill to make it effective on the Kansas Register, and Senate Bill 78 is effective upon publication in the statute book. Would you like them to both be effective in the statute book? Or both in the register, or would you like them to be the way they are?
Doesn't matter to you.
I think I would go with the statute book if there wasn't a compelling reason for the register. And do we need we probably need to clarify that through a motion. Would that be useful, Madam Reviser?
That would be most helpful. Thank you, sir.
So I would welcome a motion that both would be enacted upon publication in the statute book. Representative Neighbor?
I will amend my motion to say that both of these would become effective upon publication in the register. In
Statute
the
book.
statute book, I'm sorry.
Thank you. Seconded by Representative Dodson. Thank you for the point, Reviser, for our consistency. Discussion on the amendment? Seeing none, Representative, you may close.
Thank you, Mr. Chairman. With that, I move that we pass out Senate Bills.
I'd just have you close on the
Oh,
amendment.
close. I'm really moving us along, guys. Sorry. I move my motion.
You've heard the motion by Representative Neighbor to amend. All those in favor signify by saying aye.
Aye.
Opposed, nay. Ayes appear to have it. The ayes do have it, and the amendment passes. We are back on the bill as amended. Representative Neighbor.
Maybe I can do this correctly, sir. Thank you. Mr. Chairman, I would move that the committee pass out Senate Bill 78 favorable for passage as amended.
Thank you. Motion by Representative Neighbor, seconded by Representative Dodson. Sorry, I don't have a good look at my other partners and colleagues in the other room to grab seconds and motions, but I appreciate your input as well. Discussion on the motion. Seeing no discussion or questions on the motion to pass favorably, Representative Neighbor, you may close.
I close.
Heard the motion by Representative Neighbor to pass Senate Bill 78 favorably as amended. All those in favor signify by saying aye.
Aye.
Opposed, nay. Ayes appear to have it. Ayes do have it, and the bill is passed. Committee, thank you for your attention to all of those details, and that takes us up to date on the bills that we have heard and are working today. Next, we will move to a hearing on the licensing bill, Senate Bill 37. I'd ask for an overview from the reviser.
Wow, it's the reviser Ma show so far. Thank you, Mr. Chair. Senate Bill 37 amends KSA 2020 sub 4902, 4903, 4905, 4909, 4912, and 4915 of the Uniform Insurance Agents Licensing Act and KSA 40-5505 and 40-5512 of the Public Adjusters Licensing Act. The bill also amends KSA 40-241 pertaining to examination of applicants for licensure as an agent. Just so the committee knows, this is largely the same bill as House Bill 2074 with some additional amendments that the Senate Committee on Financial Institutions and Insurance and the Senate Committee of the Whole made prior to passing the bill. But in the interest of clarity and kind of following along, I'm going to describe the amendments in the section in which they all occur. The bill did eventually pass the Senate Committee of the Whole on a vote of 31-6. So Section 1 amends KSA 40-241. As you recall, this section, under current law, if an individual fails to pass the licensure examination, the individual gets to retake the examination time after time after time, up to 4 tries. On the applicant's 4th try, if the applicant fails again, that applicant under current law needs to wait 2 years before attempting again. The bill would actually strike that 2-year waiting period and allow the applicant just to keep trying as long as the applicant wants to or until the applicant actually passes the exam. Section 2 amends KSA 2020 sub 40-4902, which is the definition section of the Uniform Insurance Agents Licensing Act. And here, as you recall, the definition of biennial due date is being amended to specify that it is the last day of the birth month of a licensed insurance agent or the last day of the month of initial licensure for a registered business entity. Section 3 amends KSA 2020 sub 40-4903 pertaining to the insurance agent's license, renewal fees, and requirements. And here, new language has been added to require that an insurance agent pay a biennial renewal application fee of $4 and apply for renewal on a form prescribed by the commissioner. The controversial part of this section pertains to the continuing education credits, which have been changed. Current law requires that a licensed insurance agent who is an individual and holds a property or casualty qualification or both, or a personal lines qualification to earn a minimum of 12 continuing ed credits in courses certified as property or casualty, and that include at least 1 hour of ethics. And current law also requires a licensed insurance agent who's an individual and holds a life, accident, and health or variable contracts qualification or any combination thereof to earn a minimum of 12 continuing ed credits in courses certified as life, accident, and health or variable contracts that include at least 1 hour in ethics. And the bill would amend current law to require that on and after January 1, 2022, with certain exceptions listed in paragraphs 3-6, each licensed insurance agent would be required to earn 18 continuing ed credits that include at least 3 hours of ethics, and that may also include regulatory compliance. The Senate Committee of the Whole amended the section to state that any licensed insurance agent who's a member of the National Guard or any reserve component of the armed services who serves on active duty for at least 90 days will be granted an extension to complete the continuing ed credits until the biennial renewal date that occurs after the year in which the licensed agent's active duty status ceases. The Committee of the Whole also amended the bill to require that a licensed insurance agent who holds a life insurance license solely for the selling of pre-need funeral insurance be required to provide certification from an officer of each insurance company that has appointed the agent that states that the agent has transacted no other insurance business during the period covered by the report. And I would note that if the committee chooses to work the bill, here we go again, I would request the ability to make a technical amendment to change as I stated, the exceptions listed in paragraphs 3 through 6. One of these amendments was a floor amendment that happened very quickly. I need to update the 6 to a 7 due to that additional category of licensed insurance agents that may serve on active duty. The language got in, but that updated quantity of category did not make it in. So that is one that I would request. Section 4 amends KSA 2020 sub 40-4905 pertaining to applications for resident insurance agent licensure. Amendments to this section relate to disclosures made by licensed persons or entities to the commissioner. On pages 13 through 14 of the bill, a number of items have been added relating to disciplinary actions on a licensee's license or criminal history, and changes in information of the person or entity that the person or entity must report within 30 days of the occurrence. Section 5 amends KSA 2020 sub 40-4909 pertaining to the commissioner's power to deny an application or suspend, revoke, or refuse to renew a licensee's license if the commissioner finds that the applicant or licensee has engaged in certain behaviors listed on page 16 of the bill. The bill adds to the list a failure to respond to an inquiry from the commissioner within 15 business days. The bill also adds a number of items that the commissioner shall take into consideration when deciding whether to grant or renew a license, and those are also listed on page 16. The bill also states that a licensee whose license has been revoked shall not be able to reapply for a license for a period of 5 years or other such time period as the commissioner may prescribe. But the Senate Committee on Financial Institutions and Insurance amended that provision to lower the time period from 5 years to 2 years and to completely remove the commissioner's discretion in amending that time period. With that, those are the 3 amendments that that were made to the bill that makes the bill different from our version, the House version of the bill. Section 6 amends KSA 2020 sub 40-4912 pertaining to the appointment of agents. Under current laws, certification of other than a licensed insurance agent will automatically include each licensed agent who's an officer, director, partner, or employee, or other legally associated or otherwise legally associated individual with the corporation, association, partnership, or other legal entity appointed by the company. Effective January 1, 2022, the bill would remove the requirement that these individuals or entities be certified and be required to pay the associated certification fee. Section 7 amends KSA 2020 sub 40-4915 pertaining to the renewal of insurance agent licenses. The amendment to the statute allows the commissioner to suspend the agent's license for 90 days if the agent does not apply for renewal by the agent's biennial due date, and the assessment of a $100 penalty for each license suspended. If the agent fails to apply for renewal after 90 days, but before 12 months have expired, the agent wishes to reinstate the license, the agent will be required to pay a reinstatement fee of $100 per license. But if after 12 months have passed, the agent decides to reinstate the license, the agent will be required to submit proof of continuing ed completion and pay the reinstatement fee. Section 8 amends KSA 2020 sub 40-5505 pertaining to public adjusters licenses. And the amendment here grants the commissioner the authority to require that the applicant for a public adjuster license be fingerprinted and submit to a state and national criminal history record check or submit to a background check or both at the applicant's expense. Section 9 amends KSA 2020 sub 40-5512 pertaining to the continuing education credits for public adjuster licenses. And here the amendments have been made to the definition of biennial due date and to the continuing education requirements to be consistent with the changes made to the Uniform Insurance Licensing Act made earlier in the bill. And with that, Mr. Chair, I can stand for questions.
Any questions for the reviser? Seeing none, I think you get a break for just a moment.
Thank you.
Oh, excuse me, Representative Toplicker.
Darn.
Sorry about that. I didn't see section 6 listed in the supplemental note. I just wondered, did it just get left out or something? Or am I looking at an old supplemental note?
In the sup note, that would be Melissa.
Okay.
Representative Toplicker, we put two like subjects together relating to appointments of agents. So on page 3 of the supplemental note for the version as amended by Senate Committee of the Whole, we have a header there that speaks to both appointment of agents and the notification. So it addresses both sections 4 and section 6. So we did a little bit of change in the organization to put those like topics together.
Thank you for the question. Any other questions for the reviser? Seeing none, thank you, and we'll just continue with Ms. Rennick, if you would give us an update on the fiscal note.
Thank you, Mr. Chairman. Just a reminder, you held your hearing on House Bill 2074 on January 20th. So this is the same fiscal note that you received at that time. It was written for the bill as introduced. And the largest change is a change in revenue, and this relates to Section 4 of the bill in removal of the affiliation requirement for business entities, that is insurance companies, and the appointment of agents. And so a calculation method is provided for you, but the result is an estimated revenue loss of $5.257 million. So that is a loss to the Insurance Department Service Regulation Fund. And that is because the bill removes that affiliated agent requirement. And so the department believes insurance companies would not retain 49.5% of their company appointed agents. There is, with the the biennial fee that Eileen mentioned in section 3, the department does anticipate receiving additional revenue into that same fund, the Service Regulation Fund, from the new $4 biennial renewal application fee for its resident individual agents and business entities. So half pay each year. And so they provide an estimate of that rate that would come in from those. And so it'll be about $26,000 per year. The department also notes that they would need some additional expenditure authority. They do need to make some computer programming changes for 2 of their systems. And that cost estimate would be $295,000 from the same Insurance Department Service Regulation Fund. For the Kansas Bureau of Investigations, investigation would have additional expenditures for processing fingerprint checks. However, those will be offset by any required fees, and there's no fiscal effect on the Department of Revenue. Mr. Chairman, those are the sum total of the fiscal information for the bill.
For that overview, any questions on the fiscal note? Seeing none, we will move into our testimony and begin with Lee Modisett, Kansas Insurance Department. Welcome back to committee.
Thank you, Mr. Chairman. Lee Modisett, Kansas Insurance Department. Reviser did a good job covering the substance of the bill, so I won't rehash that. I think the couple of notes here, the substantive difference between Senate Bill 37 and 2074, House Bill 2074, which 2074 passed this committee and passed the House chamber unanimously. The amendments that the Senate brought on, while they do change the underlying bill, the Insurance Department does not have any particular issues with these changes. These are changes that we can live with. In the interest of time, we would ask that if the opportunity presents itself, we would like to move this process forward if possible. There is some programming time involved as well as some general education of the changes. So just keeping in mind the calendar and how that process looks like, if the opportunity would present itself, we would be fine with either version moving forward. And with that, Mr. Chairman, I would be happy to take questions at the appropriate time.
Thank you. Committee questions? Just while you were very clear, if I understand your final statement, if we moved it forward sooner, it could be worked on the floor perhaps this week versus next week. Is that what you're thinking with moving it forward?
Yes, from our perspective, the more lead time we have to program and implement these changes and educate agents, because they are, on balance, it's more process changes, but there will be an education piece and there will be some programming involved. And so the more lead time we have with that, the better our implementation will be.
Thank you. Other questions? Seeing none, thank you for your testimony.
Thank you, Mr. Chair.
And that means we're saving all of our questions for our next proponent, Ms. Smoller, with the Kansas Association of Insurance Agents. First, thank you for coming to committee, and thanks for being here to share with us and weigh in from the industry perspective. Is the other room able to hear well?
Can you all hear me now? Chairman Johnson, thank you. In the interest of time, I will try to keep this very brief, but I am available for questions. We supported this bill, and I testified in front of you in January when it was House Bill 2074. We continue to support this bill with the 3 amendments that were passed from the Senate on a committee as a whole. We still believe that this overall bill represents a position that all stakeholders in this industry can support, including our association. It increases the professionalism in our industry. It increases efficiencies from both the perspective of the Kansas Insurance Department and for agents and carriers that are doing business in Kansas. I will also add, I am a licensed agent in Kansas. I'm licensed in property and casualty and have been for over 15 years. Our executive director, David Holcher, is a dual lines licensed agent. He has both a property and casualty license and a life health license and has also been licensed for a number of years. So if you have any questions, not only for our industry, but as this affects particular agents, we are happy to help with that. And with that, I stand for any questions.
Thank you. Committee, any questions? Seeing none, I would again thank you for taking time to join us. I appreciate that perspective. I appreciate the perspective on the CE. I appreciate the perspective on the consistency of using the NIPER system and the other things that you and our other proponent referenced in written testimony. Thank you for being with us. Committee, I would direct your attention to the other proponent testimony we have, which was written only. And with that, is there anyone else wishing to appear as a proponent on Senate Bill 37? Anyone wishing to appear as an opponent? Neutral? And anyone else at all on Senate Bill 37? Seeing and hearing none, we will close the hearing on Senate Bill 37. So, committee, we have one more bill to hear, and we also have, so Senate Bill 37, we can work on Wednesday at our meeting. If the committee has no questions or is not contemplating amendments to Senate Bill 37, we could consider working that one today at the direction and the discretion of the committee. So is there any guidance on that? Representative Neighbor?
Thank you, Mr. Chairman. Based on the request of the Insurance Department, and knowing that we have heard this before and all amendments that were placed in the Senate are agreeable, I would like to ask if we could emergency this up and pass this out today.
So that would be a motion to suspend our rules and
Yes, sir.
handle Senate Bill 37 today. I think I need a second on that. Representative Croft. And I think, is that debatable? I think it is debatable. It's not debatable? It is not debatable. So thanks for that clarity. So with that, we will move to a vote. All of those in favor of working Senate Bill 37 today and suspending the rules signify by saying aye.
Aye.
Opposed, nay. I'm listening carefully. No. If there is that a real no? Yeah. Well, it is split on whether it's 2/3 or unanimous to be able to work a bill. So the no is not a no. So thanks for voicing in. I'm glad that I could hear if there was an objection. But if indeed there is no objection, I would entertain, and we'll dispense with the revisor overview since we just heard it. I would ask the committee's wishes on Senate Bill 37. Representative Croft?
Mr.
Mr.
Chair.
Chair, I move,
Oh, Madam
Sorry,
Revisor.
could I, as a point of clarification, ask for my slightly technical amendment, very small technical amendment, to change the 6 to a 7?
Yeah,
As I
yes, and
described.
that would be consistent with what's coming out of the Senate. It's only changing it before us. It's not changing it from the intent of the Senate, right? It's merely
No,
changing it to
not
be
at all.
consistent.
It corresponds with the Senate. Yes. It's the corresponding amendment to the quantity, and it would correct the bill
So
itself.
I would specify that as a technical amendment that we are able to make. Is that consistent with what you would desire?
Yes, sir.
So, if that can be accomplished under the purview of those technical amendments, I would continue with the motion to pass the bill favorable, notwithstanding the technical changes the revisor may need. If I am inaccurate on that, revisor, please correct me.
Nope, that would be great.
Okay. Thank you.
so with that,
Representative
Mr.
Croft.
Chair, I move the committee recommend Senate Bill 37 favorably for passage.
Motion by Representative Croft, seconded by Representative Neighbor. Discussion on the motion. If there is no discussion, Representative Croft, you may close.
I close.
Heard the motion by Representative Croft to pass Senate Bill 37 favorable. All those in favor signify by saying aye.
Aye.
Opposed, nay. Ayes appear to have it. The ayes do have it. Thank you, committee, for your attention to that bill as well. That puts us in a position to welcome our other guests to the committee and begin our hearing on House Bill 2111. We will get to shift revisers for a moment and begin with an overview of the bill.
Thank you, Mr. Chairman. House Bill 2111 provides that on and after July 1, 2021, the Department of Corrections would be an eligible employer and shall affiliate with the Kansas Police and Firemen's Retirement System, or KP&F. The entry date of the system of the Department of Corrections would actually then be July 1st, 2022, for security officers employed by the Department of Corrections. The bill does define security officer to mean the same as defined by KSA 744914A, parent 1, parent A, and B. That is currently the CAPERS Correctional Subgroup A, and that is those who actually are in the corrections officer job classification, and any supervisors within the correctional institution if those individuals were promoted from that corrections officer job class. Currently, they do have an earlier retirement age under CAPERS as opposed to just the regular retirement age in CAPERS. So it's that group that those corrections officers that would be moving to KP&F under the bill. Upon affiliation, Department of Corrections would be required to pay a sum sufficient to satisfy employer obligations as certified by the Board of Trustees. Every person who is first employed as a security officer on or after the entry date of the department would become a member of KP&F. For those security officers that would be currently employed, on that date of affiliation, they would have an election option to become or not to become a member of KPNF. You'd have to file that election with the board. It would be a written election. Failure to file an election would be presumed to not become a member of KPNF, and that election would be irrevocable. The determination of all benefits would be computed upon the basis of credit service under KPNF statutes, and it would include all participating service as security officer, even that service before the affiliation and entry date of the Department of Corrections. It would be all that would be converted over to participating service with KPNF for those officers. Any security officer who becomes a member of KPNF who has a vested retirement benefit under KPERS and who terminates employment prior to attaining a vested KPNF retirement benefit may have their service credited for the purpose of computing retirement under KPERS. So they can still they don't vest under KPNF, but they do have a KPERS benefit. They can get that counted towards a KPERS retirement benefit. The members under the bill would be required to then start making the KPNF employee contribution of 7.15% versus the KPERS employee contribution rate of 6%. And the bill becomes effective upon publication in the statute book July 1st, 2021. And I can stand for any questions, Mr. Chairman.
Questions for the reviser? Seeing and hearing none, thank you for the overview, and we will move to our research department for an overview of the fiscal note.
Thank you, Chairman Johnson, committee members. The fiscal note follows much of what David has put together in his review, and so it speaks to the increase in the employee contribution rate for those members that choose to do so from the Department of Corrections to affiliate with KPNF. It speaks to the impact on the KPNF payroll with those increased employee members. It also speaks to the net impact on the KPNF employer contribution rate, the net impact for all KPNF employers, an additional unfunded liability that's relevant to the affiliated members' past service credit, and then also to the agency costs to KPERS itself. The fiscal note reminds us the Division of the Budget and the Governor will be required to include all necessary employer contributions in the budget resulting from this shift of the Department of Corrections to KPNF. And the KPERS actuary completed a cost estimate for House Bill 2111. Moving those KPERS correctional members to KPNF would reduce the overall KPNF employer contribution rate, with approximately $105 million in payroll being added to that overall KPNF group. So that result has an impact on the employer contribution rate. It is estimated at this time to reduce from 22.99% to 20.54% with the bill's enactment. However, for the Department of Corrections, that agency would see a net increase in employer contribution rates as the bill would move a group of employees from the KPERS Correctional Group A and B to KPNF. And so that would be a net increase of 5.7% to 6.4%, depending on that original membership of this eligible security officer. KPERS and the Department of Corrections estimates the total employer contributions for the Department of Corrections would increase by $7.2 million from the State General Fund with the bill's enactment. KPERS does note, however, that when factoring this impact on the State General Fund, other KPNF employers would have a lower contribution rate, which would reduce employer contributions for those agencies by a net $1.5 million. So the overall effect on state expenditures for KPNF employer contributions would be an increase of $5.7 million from all funding sources. So that would be $7.2 million, subtraction of $1.5 million, which gets us to the $5.7 million. The overall effect, however, on the State General Fund will depend on the salary funding mix of those other KPNF employers. In terms of the additional unfunded liability, KPERS notes that the bill does provide KPNF membership credit for past service for these members. When an employer affiliates with KPNF for past service, there is a resulting increase in the unfunded actuarial liability of the KPNF group. This increased liability must be funded by the newly affiliated employer, so the other KPNF employers are not paying the cost of the new members. There is KPERS indicates law that provides for some KPERS assets to be transferred to KPNF to help cover this cost, and the law would allow an amount equal to 2 times the member account balances to be transferred from KPERS to KPNF. For the KPERS Correctional Group, the remaining amount of unfunded liability after this asset transfer would be $96.2 million. If the payment cannot be made by the Department of Corrections or the state in a lump sum, the amount is permitted to be amortized over 15 years and would require an annual payment of $10.7 million, all from the state general fund. Finally, KPERS speaks to its own cost as an agency, so to provide transition and ongoing support to the Department of Corrections, KPERS estimates it would need approximately $67,000 for a 1.0 FTE position. This would be paid for from the KPERS Trust Fund, and then it speaks to the salary and wages benefits that's associated with the position, and also assist with any technology changes that might be necessary to accommodate this change. And Mr. Chairman, any of those fiscal effects are not reflected currently in the governor's budget report for fiscal year 2022.
Thank you. Committee questions on the fiscal note? Representative Miller?
Not on the fiscal note.
Okay, on the fiscal note, Representative Riley?
Yes, yes, thank you, Mr. Chair. Just on the last part of the fiscal note, can I get a comment from the KPERS executive person of whether that one person FTE would be for just 1 or 2 years, or whether there would be ongoing one extra FTE? Because sometimes those roles just kind of roll in, and so it might just be for a short period of time.
Thank you, Mr. Chairman and Representative. I believe this would probably be an ongoing one and not just a temporary one, in part because it brings over about 1,900 employees. And as a group, KPNF members are always interested in lots of calculations and lots in terms of benefit retirement options, I think at a higher level than regular KPERS. And so I wouldn't say they're a needy group. I would say they have lots of good questions about their retirement. So the level of service that we provide KPNF members, based on that, I think there's more interaction, I guess, at that level. So that'd be our thinking, but clearly it's all subject to the budget process.
Thank you, Alan. Thank you, Mr. Chair.
Thank you. And Alan, if you want to just hang out there, I do have one question that I will just lodge, but you don't need to take time to respond, whether it's either research or KPERS. It was mentioned that the liability for the back service would be $96.2 million after the asset transfer. I was wondering what the amount of the asset transfer from KPERS to KPNF was, and if that would be an increase to the KPERS liability in addition to the $96.2 million. But I would take that number after committee, as I most want to hear from our proponents today and not belabor that point. So are there other questions on the fiscal note? If there are not, let's see, Representative Miller, did you have a question before we move to our informational?
Yes, thank you, Mr. Chairman. I'm new at this, but are we an exempt committee?
Thank you. We are not an exempt committee.
Was this bill blessed?
It was not. So we have an informational hearing, but to that point, we would not be able to take action on it this year.
Okay, because it doesn't actually say informational hearing, so
That,
this is just
would
an
be
informational hearing.
It is. That would be the chair's error. I should have been more specific on that. So
Well, I wasn't going to accuse anyone but you. Thank you.
that would be a correctly placed accusation. So anyway, thanks for the clarification. So are there any other questions on our bill brief and fiscal note? If not, we'll move into our testimony. And just to set the expectations for the next group, we'll take questions by group. So when we're fortunate enough to hear from our proponents, we'll hear from all of them and then ask questions. The others are a group of one, so it's not quite as much. So we'll hit Alan right away if we happen to have questions. But thank you for providing informational testimony to kick us off, Director Conroy.
Thank you, Mr. Chairman, and David and Melissa have done a great job. I might just walk through and provide just a little bit of information. Again, this is moving all of their current service and, of course, all future service. If they're currently in Capers Correctional, if they have 10 years in Capers Correctional under the bill, that now would be covered under KPNF, and then all future service would under KPNF too. Just remind you, Capers, KPNF is that basic defined benefit program, final average salary times years of service times 1.85% for Capers, and it's similar but a higher multiplier for KPNF. Currently, Capers correctional officers in Group A, which are those correctional officers, about 1,900 of them, they can retire at age 55 with 10 years of service. They currently contribute 6% of their pay. The state Department of Corrections contributes the current statutory rate a little over 14%. Difference in benefits, multiplier 1.85 versus 2.5. Employee contributions 6% versus 7.15. Employer contributions is at the full actuarial rate, so currently at 22.8% versus the 14% roughly under Capers. They can vest under KPNF at the end of 15 years compared to 5 years under Capers. Normal retirement, again, under Capers Correctional is age 55 with 10 years of service. Under KPNF, it's age 50 with 25 years, age 55 with 20 years, or age 60 with 15 years. Of course, with that higher multiplier, the benefit, and there's an example on page 2, same years of service, same final average salary, be about $22,000 compared to about $30,000. And again, there's some policy questions there, just in terms of that election, and also in terms of if a person retires, has Capers and KPNF service, when can they retire under one, and how does that impact the other? But might save that for another day. I think Melissa's done a great job going through the contributions, because it takes all of the Capers unfunded liability and this large payroll to KPNF so now you're spreading the KPNF liability now over a much larger group, so that employer contribution rate goes down from about 23% to about 22.5%. And of course, the Department of Corrections is at a little over 14% currently, so it's about $7.2 million for the Department of Corrections annually. But then there's savings to the other state KPNF agencies, Highway Patrol, KBI, for example, which now their rates go down as well, so it saves about $1 million there. So the net cost to the state's about $58 million. And again, we've had, I think, the discussion already about all years of service going over. So that's that prior service, as it's called, who's going to pay for that $96 million that was mentioned to pay that off. It can be amortized over 15 years, and it'd be about $10.7 million a year for the 15 years, in addition to the employer contribution. And again, since KPNF, the overall group is getting larger, it also then lowers the rate for KPNF local members, employers, and saves them about $11 million a year, spread over about 108 KPNF employers, and we've talked about the administrative costs. So certainly it gets back to that fundamental purpose of KPNF, of wanting to have, for public safety officers, wanting to have a young, vigorous workforce to meet the rigors of the demands of the position, and that's what KPNF's all about. So, be glad to go into more detail, but I know you've got some good conferees on tap. So.
Thank you. Committee questions? My questions, Director Conroy, would be is what I mentioned on the fiscal note and,
Yes.
and over time getting my arms around each piece and how that moves. Another area would be any efforts to explore and the flexibility now that we have Tier 3 to make changes within the subgroup if there are not other employees going into that group. But again, something that if you wish to address, you can.
Just briefly remind you, Capers Correctional Officers are the only group that are still active and going into Capers 2. So the Capers Correctional Officers are not in Capers 3, only in Capers 2. And it's a closed group otherwise for all other regular Capers employees between 2009 and 2015, except for correctional officers. So if one's hired today, that correctional officer will be in Capers 2 correctional, or Capers Correctional, which is Capers 2.
Correct, thank you. And the subgroups have never really fit the needs, well, opinion of the corrections officers, but I wondered with other members now being out of Tier 2 going in, if there was more flexibility to make those changes within. And I have one other, and then I'll go to Representative Neighbor, if I can remember which that was. As we look forward, I would like to go just a little more into what the employer contributions are, because it's really clear employees are at 6. They would be at 7.15. We know where the employer contributions are, and I have a decent handle on the Capers payments and where that payment is going, in that we finally kind of hit the hump on the increase of the contribution rate. Are we at a similar point in KP&F, albeit at a higher rate? How long does that continue? When does that curve start to come down? And how long might I expect that 20-plus rate to continue versus the 14-point rate on the other plan? And if you need to get back with me on that, that's fine.
I will say, with one minor, one-time exception, the KP&F employers have always contributed the actuarially required rate, so their funded ratio is way higher, but we can provide the details.
So yes, but while the funded ratio is higher, our contribution rate is also still higher. So I just don't know where we are on that curve, if I'm going to stay at 20% for the foreseeable future, or when that starts to come back down, or if 20% is the normal rate. If it's always been, is that just the rate that we're going to pay as an employer versus the rate that I'd expect longer term on the Capers plan?
We'll do some checking and get with the actuary, but I'm guessing probably going to be
closer to that. Okay, thank you. I appreciate that, and sorry to belabor those points with us. Representative Neighbor.
Thank you, Mr. Chairman. Alan, Mr. Conroy, sorry. What would this do if we took this on and more was required in Capers payments each year? How much is that going to raise that amount?
Under the provisions of this bill, so all of that current liability for the Capers correctional officers that's in Capers, this bill transfers it over to Capers, so it doesn't impact, I mean, I guess it lowers the pool of, or the salary pool, but it takes the liability over too. So it takes employees out of regular Capers Correctional, which is a subgroup, and moves over not only the employees, but also the liabilities in this bill. And so I think there'd be minimal impact on the Capers side because of that.
So is KP&F fully funded?
It is not, it has, I'd have to check, I don't remember, maybe in terms of the funded ratio, it's certainly higher. Again, it gets you back to that actuarially required rate. I don't know whether we're to 80%, 74% for KP&F.
Okay, and in Capers, we're looking right now at?
Around 70 right now, 70, 71.
Thank you. Thank you, Mr. Chair.
Thank you. Although it continues to get sticky, if I move folks out of the state group, which is more highly funded than the school group, and I then amortize the remaining liability over, there would be some increase in the payment required by amortizing that liability over a slightly smaller group. So, okay, I'll quit. It's time to move on from that. Thank you for taking us
Yeah.
through those.
And as a group, KPNF, or those Capers Correctional Officers in general are currently older than the other members currently in KPNF. Maybe that would change over time as KPNF, those correctional officers had the opportunity for retirement under the provisions of KPNF.
Thank you. Thank you. Did you have a question, Representative Miller? Or Representative Riley? I was thinking you were catching my eye, so I did actually mean you, but Representative Riley for a question.
Thank you, Mr. Chairman. It came to my awareness just with this conversation that somewhere along the line I lost the gap. But where is the employer's contribution rate calculated? Is that in committee someplace or executive place, or who makes that?
The Board of Trustees, the actuary does the calculation. The Board of Trustees sets the current actuarially required rate and certifies it to the state budget, local governments, and so forth.
So a great question, Representative. So the actuary really is the basis of saying, here's the remaining liability over the amortization period and schedule that we have. To meet that, the contribution is X. Occasionally, X gets changed by the legislature in the appropriation process. So while it is not the required contribution, the statutory contribution in some cases has been lower. I don't think it's ever been different on the KP&F side, but it has been on the Capers side. So, seeing no further questions, thank you. We will move on to our proponents, who first, a huge thank you for being here, and a thank you for your patience as we work through those other bills and watching the sausage making. And with that, I would welcome our first proponent, Representative Proctor.
Thank you, Mr. Chair, and thank you for holding this hearing today. Since the hour's late, I'll be very brief. Director Conroy did a great job.
I appreciate the brevity, but I would encourage all of you to take the time to share the information that you have for the committee. Thank you.
Thank you, Mr. Chair. So Director Conroy did a great job of laying out the comparison. For my colleagues on the committee here, I would commend to you my written testimony that has a chart that lays out a comparison, which is based on some great information I got from the staff at Capers. If we have the opportunity to work this bill next year, there are a couple important changes that I am going to offer as amendments because of the discussions that we've had over the last several months and as I've frankly learned more about the process and the system. The first one is, and Director Conroy alluded to it a bit, the election, the idea that a corrections officer will have the option to stay in Capers for correction or move to KP&F is apparently crossways with federal tax law. And so we would have to remove that election. So an amendment I would offer is that the movement of corrections officers into KP&F from Capers for correction would be automatic because offering an election creates some tax code difficulties. The second thing is, and we've talked about it quite a bit, this $96 million unfunded liability that you create in KP&F when you move all the years from Capers and roll them over into KP&F. So the amendment that I would offer would be to change the calculation of benefits so that time in Capers for corrections is calculated at that multiplier, and the time that the corrections officer gets in KP&F after they move over will be calculated at that rate. And that would eliminate that $96 million, which is, really in these fiscal times going to be challenging to meet. That's not terribly unusual. Right now, if a corrections officer comes to corrections from some other job where they are working in Capers, or if they leave corrections work and go over, to some other flavor of capers, that's how the calculation's done. So that it would not be that unusual. I'd like to take the rest of my time to address a couple of things that I've kind of heard around the building as I've been trying to get this bill moved forward. The first one is that corrections officers are not law enforcement officers, and I think when we talked about this on the floor of the House a little while ago, got my emotional expression of my thoughts on that. But I'd just say, firemen aren't police officers either, but they're in KPNF, and that we and there's nothing in the KPNF kind of regulations that requires that you be a registered law enforcement officer, card carrying, in order to be in the program. It's decided by us, the legislature, who goes in that program. And the other concern that I've heard raised is, corrections officers, they get a Social Security benefit, and police officers don't pay into Social Security and don't get a Social Security benefit, and that's why they get this additional benefit. And to that, I would say first, there are 7,000 total people right now, give or take, in KPNF, and about 2,000 of them also get Social Security, like, for instance, our Capitol Police. So so it's not unusual that there are people in KPNF that also draw Social Security. But I will stop there because I want to leave plenty of time for our other proponents to talk, because they're a lot more interesting than I am. And so with that, I'll stand for questions at the appropriate time.
Thank you, Representative. Our next proponent, Jeff Fagan, one of our correctional officers. Thank you for being here today. Welcome to committee, and thank you for your service to the state.
And I thank you for having me. The question that was just brought up, I've been a correctional officer since 1983. So for 38 years in training, I have been told every year that in the course of my duties under Kansas state statute, I am in fact a law enforcement officer. So the question of whether or not correctional officers are law enforcement officers is moot. We are in fact law enforcement officers. That's one. Number two, in the course of the time that I have been there, I have worked with nothing but convicted felons. Every person that I work with, that I interact with on a daily basis, is a convicted felon. And that is a high standard to meet that is not met by a normal law enforcement officer. A police officer does not do that. Sheriff's officers do not do that. They interact with the general public. We do not. Everyone's a convicted felon. So it's a standard that we have to meet that is much higher than that is met by a standard law enforcement officer. In the course of the time that I have been there, I've walked thousands upon thousands of miles on concrete. I've climbed thousands upon thousands of flights of stairs. That was in the old facility that's now closed. I work at Lansing Correctional Facility that we've just built a new facility. I'm sure you're aware. It's led me to osteoarthritis in both knees and my left hip. My left knee will have to be replaced, according to the doctor, sometime in the future. And these things, now this is over a course of a 38-year time span. If in fact someone did not have to work that length of time, perhaps those things would not be the case if we were able to retire at a better rate earlier. Also, making the job itself more desirable by having a better retirement fund should help our turnover rates, which have been astronomical through the course of the years, and even worse in years late than they were when I worked there many years ago. We at Lansing Correctional Facility, and I'm told that every other facility in the state are having huge turnover rate problems. Those turnover rate problems lead to staff shortages. The staff shortages have been exacerbated by COVID-19 that keeps everybody that contracts it out for 2 weeks at a time. So we've been working for now probably 2.5 to 3 years. We've been working at staffing levels where we're overtiming people just to get to minimum staffing levels on a shift, all 3 shifts every day for probably 2.5 years. So we have people, some people close to doubling their salaries just by working overtime on shifts. If we could do away with that by having actually more people that would keep their jobs, or more people that would come to a job that was more desirable, perhaps we wouldn't have the added stressor of working overtime in the job. Those added stressors, as we know, within the Department of Corrections, not just in the state of Kansas, but this is on a national level. Divorce rates are higher, alcoholic rates are higher, drug usage rates are higher, suicide rates are higher, and the life expectancy for correctional officers is lower than average for people in the United States. These are all facts around the country as a whole, not just in the Department of Corrections in Kansas, but they stand in the Department of Corrections. So removing a stressor should make those things improve, should at least help to improve those things. In this course of time that I've been there, I have responded to alarms that involve gang fights, stabbings, suicide attempts, lesser things. I have been attacked physically. I've been bitten. I've been coated with human feces. And I consider myself fairly fortunate because in the course of time that I've been there, I got promoted to the level of sergeant. At the time that I got it was called CO2. I got promoted to level CO2 in 1985. I've been a cell house OIC primarily since that time. I don't respond to alarms other than those that happen in my own area of responsibility. My other officers that work with me do, and officers that are in like open positions, yard officers, so on and so forth, respond to alarms in other areas, and they have had to suffer those circumstances at a much higher rate than I do because mine only goes within my own specific area of responsibility. We have had gang fights on top of gang fights. We have situations where we can't let inmates of certain gang groups be housed in the same prison as inmates in certain other gang groups because anytime they walk out to go to the yard, they fight. Those are gang fights, large fights that require pretty much everyone available in the institution there to stop them. During those times, we have staff that gets hurt regularly. I've never been hurt. Never been hurt other than when the guy bit me. Not on the job. But we have people that's had to have their shoulders rebuilt, their knees rebuilt from answering alarms. When I first started, we had a guy that fell on and had his leg broken. He was one of our captains. We have multiple circumstances where we have people that are getting hurt, that are the stressors that are hurting them, especially in their hearts. Like for me, mine's weight. But these things are issues that are hitting us at a much higher level than they do average in the public as a whole. And even the injuries that happen and the amount of violent incidents that correctional officers have to respond to are higher than they are amongst police officers. So I believe that this bill 2111, and it's not even going to be a help to me personally. I will not gain from this because I am on my way out to retire now. But there are people that are behind me, people that I know, some that I like, some that I don't even really necessarily like a lot. But those people are going to benefit, and they'll benefit not only personally in their own, in a wage type environment, they'll also benefit, I believe, because they will not be short on shift every day, every day, every day, every day. 2.5 years that I know of, we have overtimed every day on all 3 shifts in our facility. Now, our facility is a little bit different because we have 5 incarceration facilities of whatever type in our county. You don't have the same competition for employment as you do at Norton, as you do in the city of Leavenworth, Lansing. You don't have that. But nevertheless, these levels of employment, if they can be fixed, it would be wonderful that they would be fixed. If this is a way that would do it, and I believe it is something that will help, I would ask, please, that you would vote for this. And I thank you.
Thank you, Officer Fagan, and thank you again for being here. We have one more proponent, and then we will move to questions, and that is Sarah LaFrenz with the Kansas Organization of State Employees. Welcome to committee.
Hi, Chairman. Thank you so much. So, first of all, thank you so much for your time, for allowing me to be here today. Second of all, we of course want to thank the members of the committee too for your time. And we also want to thank Representative Proctor for taking the time and the attention to push on this bill and to bring it forward. I'd also like to take a minute to thank Officer Fagan for coming forward to talk about this. Every single thing that he laid out there is absolutely correct. And I'm so thankful that he could be here today to speak to each one of you about that. You know, this isn't the first time we've talked about this. And this is definitely not the first time I or other people affiliated with our union, KOS, of which I am the president, have brought this forward. You know, I'm not going to read you my testimony line by line. I know that likely many of you already know what's in there. But the fact of the matter is that our state correctional officers carry out fundamentally specific and very specialized work. It's very different than most of the employees that are affiliated with CAPERS. You know, even before the COVID-19 pandemic, this was extremely stressful, high-risk work. And it's work that requires very specialized people with very specialized skills. And I'd also like to make sure that everyone is aware that this particular work it's not just a job. This is a career. There are whole families that work in our correctional facilities. There are long lines of people where mother and daughter or father and son and grandfather have all worked in these places serving the people of Kansas, and that is to be commended, but it also must be rewarded and respected. A lot of this has changed, of course, since we saw this bill in 2018. With the advent of COVID-19 in our facilities, we've seen already very stressed staffing levels and already very pushed workers be pushed to the absolute brink. And the dangers of what they put up with every single day with the people they work around, which are convicted felons, don't change. You know, it's alarming, the devastation, the health risks, the huge amount of risk, you know, that these people take on every single day just showing up to work. These are essential workers. They can't work from home. If they don't show up for whatever reason, even when they are ill, it puts somebody else at risk, which Officer Fagan just spoke to. And the officers that have contracted COVID-19 and then have gone on to recover from it have huge amounts of ongoing health concerns. There is a young man who worked at Lansing Correctional Facility. He is a young father of 3. He has had ongoing issues with his COVID-19 diagnosis, including low oxygen levels for several months, and still struggles to walk from one end of his house to the other. And he's got a brand new baby. You know, these are the realities that we're dealing with for the sacrifices that these people make on every single day on behalf of every single one of us, families like yours, families like mine. Accounting for these facts and accounting for the risks and things that these folks take on every single day, you know, this is why we really believe very strongly that this is a necessary change for their retirements. This also allows the Department of Corrections to both recruit and retain workers because, like I said before, this is a career for people. This is something that's important to them. They're planning their futures with this work in mind. We need to be able to retain and recruit quality staff. We also need to make sure that they are safe at work. Safe staffing goes along with being able to recruit and retain. And all of these things are very closely linked. You can't have one without the other. On behalf of the Kansas Organization of State Employees, I would urge this committee to favorably look on this bill. And I'm more than happy to answer any questions if you have anything for me. Thank you so much for your time today and for your consideration of this testimony.
Thank you for your testimony and to your attention of an hour-and-a-half committee meeting, at which moment you might be called upon to come off mute. So thank you for that. Our first question is from Representative Miller.
Thank you, Mr. Chairman, and Mr. Conroy can just nod if my preface is correct and shake his head if it's not. It's my understanding here in Shawnee County, our correction office, our jail is run by employees of a corrections department, not the sheriff, and it's my understanding that they are not covered under KPNF. So first off, I would say that I believe in the basic premises of this bill as it relates to correction officers carrying the equivalency of the other groups that are currently in KPNF. And consequently, I am very supportive of this, but I won't vote for it unless we correct the injustice that is carried by our local correction officers. Question for the carrier of the bill. You spoke of the election. I would guess that not everyone would, if there was an election, would take this election. In other words, there are some that would support the other arrangement. Is that not correct?
So if there were an election, which kind of discussed the problems with, I think that folks that were, folks that have to make a determination about how long they planned on staying. If the capers for corrections officers, you vest at 5 years. The KPNF, you vest at 15 years. And so there may be some folks that say, hey, I'm not staying here for 15 years. I'll just go ahead and stay in.
And you pay a higher rate as well.
Exactly. That's true.
There may be those, this isn't necessarily universally supported by all the correction officers. Is that fair?
I have yet to meet a corrections officer who doesn't want to move to KPNF in my district. I knocked a lot of doors and talked to a lot of corrections officers, and they would all move tomorrow. And I raised the issue because, hey, you're going to have to pay more, and it takes 15 years to vest, but they like that earlier retirement date.
Thank you, Mr. Chairman. Again, I believe they belong in this group, and I hope we can get that direction. Thank you.
Further questions? Representative Riley.
Yeah, thank you, Mr. Chairman. I think we saw some of this bill a couple years ago, and the whole committee was in favor of this at that time. And I would just have a question that, we call it KPNF, it could be KPF and C, right? So it's just how we call things. But I do have a question. It's more of a personal type of a question of Mr. Fagan, if you would have a minute just to answer a question. And I think we were starting to get to some of that with the carrier of the bill. But I start questioning, when someone is hiring on to a very difficult job like this, do they look at the retirement part of this? Because sometimes when you're doing an interview, you don't always ask all those package questions of the retirement and everything. Do you think as much of a pull will be, as you were alluding to, about whether it'd be in one organization or another that you get your retirement, or just flat out you get a good retirement? Or the fact that what we did last year, and actually gave you folks a raise and some extra money to hire more people on that, I guess that's where I'm going. Which is going to be the better pull, that we incentivize your folks hourly rather than the pull of 15 years and retirement? Thank you.
Thank you. And I would suppose now that we have lowered the hiring age from when I started at 21 to 18, because we can't find enough people to work there, right, for the Department of Corrections, I would suppose that most people that are 18 years old cannot think 10 years in advance, much less 15 to 25 or 30 years in advance It was not necessarily the case for me when I was 21 and started at the prison, and I could think that a retirement was something that I had to shoot and look forward to, that was important to me. I'm not sure, I probably was not in the norm for someone at my age group. So at the very base level, a raise in the starting wage would probably hire more people, but it would not necessarily keep more people. Once a person learns what their benefits are and their benefits start to apply into their lives, for instance, they can see what their CAPERS retirement would look like if you retire, because they send you the paper out every year, right? Once they can see, hey, look, I'm going to get this much money if I work this many years. If that number was 1,000 under CAPERS corrections and it was 2,000 under CAPERS Kansas Police and Fire, that would be a significant difference that may well make the difference between for a person staying and going. Now, the other side of that, of course, is if they get a raise at the bottom level, the wage that they make goes up. As the wage goes up, so does their retirement benefit go up over the course of time. Both are beneficial, but, I believe it was 3 years ago that we got the raise. Not last year, I believe 3 years. I believe so. It was a 15.9% increase, at least for me, which is clearly a significant increase. Apparently, but even in that significant increase, we still do not meet the pay levels. Once again, I'm talking Leavenworth County. We don't meet the pay levels for the federal prison system. And probably are never going to be able to meet the pay levels for the federal prison system. But we can employ people, anybody over 37 cannot go to work in the federal prison system because they have a maximum retirement age that's governed by federal law. We can employ people that are 37 and above. Can we keep a person that's 18 and he works until he's 21 and then goes to work in the federal system? I don't know. I don't know that anyone can necessarily answer that question.
Well, at that point, then they would be better off with a 5-year vesting than a 15-year vesting for those 37-year-old.
Even a 37-year-old person, especially considering that the average lifespan of a human being in the United States today is 74, he's still got 37 years before he dies. So that means he's got 30 plus years, 40 years of working life. So he would be 25 years past his vesting retirement age if he works until he's, I think it's pretty safe to say we'll raise the minimum retirement age under Social Security to 70 within the next 5 to 7 years. I think that's pretty safe to say. So if it's 70, I mean, and he's going to live until 80 something. When I started there, my understanding, there were 2 correctional officers in the entire state of Kansas that were retired because all the rest of them have died. They don't live. The stressors on your body, the stressors on your soul as a whole. You retire, you die. It's much better than that today. But in 1983, there were 2 correctional officers retired when I started on a statewide basis. You know, we had less prisons in the state then, less employees, but still, 2, that's a pretty bad number. To expect the correctional officer is going to work until the day he dies. I watched 3 guys within the first 2 years I worked there die within a week of the time they left. That's not a good thing. I hope that this bill helps us avoid that in the future. I would hope. I believe it will.
Mr. Chairman, then I remember so in the KPNF, is not the early retirement at 50? So there's 20 years that they could live before they start drawing. Well, it depends on early retirement, but you can take early retirement at 57 or something, right? So you would have some earlier time to retire too.
Yeah, you could retire, but you could choose not to retire as well. You could work longer under that as well. I have been vested under Capers Corrections. I have met the minimums for Capers Corrections for 15 years, somewhere, something like that. Well, it was not the same. When I went into Capers Corrections, you had to have 85 points in order to retire. So you had the number of years you worked times your, or plus your age had to equal 85. That's not the case today, but that's what the case was then. But that's not the case today. But just to make I made 85, I don't remember what it was, about 8 or 10 years ago. I think I was 53 when I made 85. So, I just turned 62. So, and like I said, this will probably not benefit me. I'm on my way out. I'm on my way to retirement now. I'll probably be retired by October. So I will not benefit from this. But people will. And those people are the same ones that are answering alarms where they're getting hit and stuff thrown on them, and they're grabbing people that are bleeding all over them, and, for either they got stabbed or they cut themselves, people that are hanging. Those people are answering those alarms are going to benefit from this.
Thank you. Are there any further questions, committee? Seeing none, again, a thank you to all of our proponents for your testimony, for being here today, and for your work. Appreciate that very much. Is there anyone else wishing to appear as a proponent of House Bill 2111? I will move to our neutral testimony because we do have neutral testimony. Welcome, Randy Bowman with the Department of Corrections. Thank you. Thank you for spending your day with us now.
Well, it's a privilege. Thank you, Mr. Chairman, members of the committee. I get for a lot of committees, but not this one. I think this is the first time, so good to see some new faces. And thank you for spending your late afternoon and evening on what is an extremely important topic for our workforce, and we appreciate that at the Department of Corrections. I can't do justice to it in the way that Jeff did or the way that Sarah did, but I definitely want you to take a quick look at our testimony there and realize that we too are describing similar things. This work is hard, it's tough, it's emotionally draining, it's physically draining. Our folks deserve to be treated equally with their peers. And I would highlight, I've listened to this debate conversation for the last few years as there have been different versions of the bills that have been out there. And I went on Capers' website to prepare testimony a few days ago and went, oh, maybe others don't know this because I sure didn't. But we have emergency responders in KP&F. They're not part of the name or the acronym, obviously, as the representative pointed out. So my point in raising that today is simply the body that is in KP&F today is more diverse than we sometimes think about. Then reflecting on Jeff's comments, he's absolutely right. In other pieces of the law under the statute, our employees do have law enforcement authority and powers. So more diverse than we sometimes realize, and yes, our folks are law enforcement as well. So we are supportive of this concept, is what my testimony says, but we have to be neutral on the bill, and that's primarily for this reason. A lot of talk here about corrections capers, that particular version that's in the old. Some of the other bills that have been out there in recent years, though, address the rest of our workforce. Our juvenile corrections officers and uniformed and non-uniformed working at the Kansas Juvenile Corrections Complex would be excluded under this bill. We've got a historical problem there. They were never part of corrections capers. They're regular capers. So today that means tier 3 for those new employees. So we would be neutral because that part of our workforce needs to be included. Another part of our workforce that is also excluded is our parole officers. They work with the same people, simply in the community setting. They too have to do like a police officer occasionally, have tracked somebody down and arrest them. They are excluded in this bill as it's written at this time. In addition, then in corrections capers today, we often talk about our uniformed corrections officers like Jeff, and that's extremely important. There are a few non-uniformed or a list of non-uniformed people in corrections capers today who have close contact and regularly work with the offenders in our facilities. But again, not all of those folks have ever been in corrections capers. So we would beg of the committee, if you can come up with a solution, we hope that you will ultimately, that not unlike our county corrections officers, as Representative Miller raised, but our juvenile folks, uniformed and non-uniformed, our parole folks, and those who have been excluded from corrections capers but do work in an institution and have that regular close contact because they've been excluded since that thing has existed, which is, I believe, 1976. So we'd love to see and work with you on that. The other thing I would just talk to, I think, that question of hiring new folks and retaining folks, this would be another tool, if you will. The raises of, I think 2 years ago, technically, moved us up from about 15-something an hour to 18 an hour. That was game-changing. We saw our vacancies go from a high level, and I can't get the exact number out of head, down, and we were doing pretty good. Then, as Sarah pointed out, COVID hit. And we have seen our vacancies of uniform folks just go up every single month since COVID hit. We may not be the most popular place to apply for a job right now where you are guaranteed almost to be exposed to COVID. That's a challenge out there in the workforce. And there's other things in our economic setting that influence that. But it's a challenge. And Jeff described it well as to how it impacts him and his colleagues day to day. So I think it's another tool, whether you're that 18-year-old, that 21-year-old, or you're 30 or 40. We're all going to look at it differently depending on where we're at in our life and spectrum. But if we have good health care, we have a good working environment, we have good pay by the hourly wage and good retirement, those are all good tools to help us recruit folks. Frankly, some of them are going to come in and go, oh, wow, this is not for me. That's a part of turnover that will always be there. But those who go, I believe I'm making a change for the good of my community, my family, and society as a whole, that's what good correctional staff do, and that's the ones who really like to see stay with us for a long time. The last point I'll make, I hear the numbers and others do a fantastic job of describing the actuarially and the rates and the retirement things. I want to point out on my third page just the one thing there. So a multiplier of 1.85 or historically 1.75 compared to 2.5 is a big deal. But it's not easy to think of that little less than a 1 point change is a big deal. But on my third page, what I talk about there is you take that officer who is going to retire and you give them the 2.5 if they were KP&F versus the 1.85. For an example of for an example of those with age 60, 30 years of service, that's CAPERS Tier 3 now, which those groups I mentioned are not in that bill are in. So they can't retire till 60, 10 years different. But the math of that multiplier is what matters. Their annual benefit would go up 35%. So 1.85 to 2.5 doesn't sound like a big number change, but when you do the math through the formula that CAPERS has on their website, it's a 35% increase in their annual income to support them in their years of retirement. I think that's why it matters so much to many of those in our workforce. That's a big number in any book that I know, at least, of change. So with that, Mr. Chairman, others, I would definitely stand for questions. Definitely be a resource to you going forward as you work this now or next year or however that goes out. Appreciate it, sir.
Thank you. Committee questions? Representative Dodson?
I've been trying to capture the why, not just of why the correction officers, but why KP&F. Is it true to say that the KP&F is structured to take care of those who are in our most dangerous and our most stressful lines of work?
My perception of why it's structured that way, yes. It's dangerous work, and I would say our folks are as much danger as anyone.
Thanks.
You're welcome, sir.
Other questions, committee? So I'd have a couple in working with the department. In the question that Representative Riley mentioned in the trade-off between ongoing cost for retirement programs and compensation, how we manage that best for the employees to certainly address the retirement issue, but also all of the other really critical issues that Officer Fagan raised for us. And if there is there an impact if I have a ongoing 20% employer contribution to KP&F, and I continue contributing both the employee and employer to Social Security at 7.5% for the employer, employee has 7.5% for that. Does that load, and when I increase the benefit 35%, and it is a better benefit, the employee contribution does not go up 35%, so the employer is going to be making up that difference. And can that be a hindrance in terms of I've got a total compensation package to put together that is of any concern to the department in managing that and attracting and meeting employees' needs throughout career and retirement?
Well, I think just speaking for us as a department, if there is a hindrance there, and the legislature saw fit to make some changes, we will do what we need to make it work. Of course, we're going to need a pretty substantial appropriation as Capers went through to make that happen. But it's important enough to our workforce, and we think it can have enough of an impact that we will do our part, sir.
Thank you. Other questions, committee? Seeing none, thank you for your testimony. Thank you to everyone on this issue. Thank you to the committee for staying here late. I don't believe we had anyone else that wished to present on this informational. Is there anyone that I am missing from the list that we had? So seeing none, again, thank you. We're adjourned, and we will see the committee on Wednesday.